Welcome to PCM Podcast, a series of informative podcasts with experts in their fields exploring a wide range of topics in payments. The theme for this session is point of sale after the pandemic. Contactless transactions, click and collect, a huge rise in e-commerce. If you're listening to this podcast, then the chances are you're familiar with these terms and what they mean in payments. They're at the heart of the transformation we've seen over the last 18 months. By now, we all know COVID has floored the accelerator on digital. But what will point of sale look like after the pandemic? Will consumers return to in-store retail or stay online? And in either case, how will they pay when they get there? I'd like to introduce our expert for the day, Keith Grose, Head of UK at Plaid. Keith has been around the industry for a number of years as a consultant at Bain, and prior to joining Plaid, was with Google for 5 years. Welcome, Keith.
Hi, Alex. Thank you for having me.
So, no problem. It's a pleasure. Let's jump straight in. What do you feel are the most important geographies for growth in the EU and why?
Well, I guess maybe before we dive in there, let's step back a second. Just as you said in your intro, right? 2020 dramatically changed the way people do payments globally, right? You had whole generations that were used to transacting in person or cash-based transactions, sequestered to their homes, having to use digital finance for the first time. And as you said, explosion in e-commerce, explosion in online payments and contactless payments, a real drop in cash. What that's done is spurred the advance of open banking. So in terms of what are the most important geographies for growth in the EU and why, I think it depends on what you mean by growth there. Where I'm coming at this is the growth of open banking and account-to-account payments. So digital payments from bank accounts to bank accounts. And I think they have a big impact in two different types of geographies in the European Union. One is places where there's a really high penetration rate of cards. And the reason for that is account-to-account payments are going to be better for cash flow because they settle instantly and cheaper for merchants. So I do think on a 5 to 10 year timeline, it's going to really disrupt card payments inside the European Union and geographies where card payments have a really high share. The other type of geography where I think open banking has a massive impact is places that were heavily cash-based, right? Because you have people who are used to paying from an account, not used to using cards, and they're going to skip straight into doing account-to-account digital payments. So when you think about places like Germany or Italy, where you have heavily cash-based payments, I think that's places where open banking will really thrive. And then similarly, I think in the UK and areas like that, where you have really high card penetration, you'll start to see open banking and account-to-account payments really benefit merchants in the long run and get high adoption there. So that's the way I would think about it in terms of growth.
Okay, cool. Thank you for the opener there. In terms of how payments will be made, and thinking along the lines of the rails and the changing preferences, I guess, around consumers and indeed merchants making and accepting payments. Which kind of payment rails do you think are growing fastest, and why do you think they're growing so fast?
Yeah, I would turn again to SEPA instant rails in the European Union and faster payments in the UK. And I think that there's a few key reasons for this. One is you have this instant settlement. And I think that is really the most important part about these account-to-account payments and open banking-based payments there. Because the number one reason why, for example, SMEs go and need to get financing or loans is cash flow issues, right? How long does it take them for them to receive a payment, accounts payable versus accounts receivable gaps? And the faster that you can settle payments and batch and reconcile those, the better it is for businesses, the better it is for consumers. And those are the rails that are going to enable instant payments. So you have all these other initiatives that are going on, like the European Payments Initiative, where you have a consortium of banks trying to come up with their own account-to-account rails as well. But I honestly do think SEPA instant rails and faster payment rails are where you're going to see growth in the next 5 years in the UK and the European Union, respectively.
Mm-hmm. Okay. So thinking about the various different technologies and different technology stacks, and again, it sort of relates back to the payments rails story. Do you see a divergence in technologies across the region? Maybe more developed and less developed, or do you see a kind of convergence of technologies taking place across the European region?
I think we're still in the early stages of account-to-account payments in Europe and the UK more broadly. So I think you're still at the point where you have across the tech stack different players experimenting with using these payment rails in different ways. And that's going to continue for several years. And then I think you will have a convergence over time. So if you think about it, a lot of payment service providers are already experimenting with adding open banking and account to account payment rails. You have payment orchestration platforms that are trying to figure out when do you route a payment to this particular rail versus a card rail versus some other rail. All of that is going to take time to develop, and then you'll start to see a convergence over time, because I do think this is a nascent but huge opportunity, and it will ultimately lower costs for merchants, and hopefully in the long run, because of that, benefit consumers with lower prices. I do think that's the disruption that you're going to see. And if you think about what's happened in the market recently with rates being raised by both card schemes across the channel and within markets inside the European Union, I think the rise of account to account payments here is inevitable. The other thing you have to remember, though, is that what this requires is the entire ecosystem working together, right? You have to have banks that are exposing quality APIs for these payment rails. You have to have regulators enforcing both the rails themselves and also the quality of those APIs. You have to have TPPs building quality development platforms, and that's where Plaid sits as one of the leading providers. And then you have to have a user experience and then user-facing fintech applications that have built a great UX on top of that. All of that takes time to develop and is very market specific. So I think the stage that you're at right now is you have players that are experimenting with this in different layers of the tech stack at different levels of maturity in each individual market in the European Union. Over time, that will converge, and there will be winners, and there will be pan-European players as well as individual winners within individual markets. That's going to take 3 to 5 years to play out, in my opinion. So I think you're in the very early stages of this movement. But I do think that you're going to see these instant payment rails become a massive player for both business and consumer payments over the next 5 years.
Mm-hmm. Okay, just a quick question on the APIs. Do you feel, again, across the region, and I know it's difficult because there are certain clear leaders and there are followers, but do you feel like the banking ecosystem has done or is doing the best it can to get those APIs up and running and available for in an open banking environment?
I think in short, no. I think it requires a standards body and regulators to help enforce the quality. So I think the UK is by far the leader in terms of API quality and uptime at this point between the European Union and the UK. And then it very much differs by market within the European Union. You're going to have a review of PSD2 coming up later this year. And I think hopefully coming out of that, some more enforcement on the quality of APIs. But I think this is one where, while some innovative banks are seeing the opportunity here, and are really leaning into producing quality APIs, you have others that are just frankly struggling with the technology undertaking of transforming their old legacy mainframes into supporting a scalable API, and others that view it as a compliance exercise and aren't going to have a great user experience unless forced to by a regulator. So I do think that you're going to have regulators step in and enforce a level of quality if you're going to actually see this take off in every market. Otherwise, it will be very much market by market, and it will take time for the consumer demand to force bank API quality to improve.
Mm-hmm. So that's, in your opinion, that's a kind of PSD3 type thing that should be reviewed and made mandatory?
Yeah, I don't think I would even call it PSD3. I think we just need to enforce PSD2. And I think you've had different levels of enforcement in different markets in the European Union to date.
Okay, cool. Thank you. Okay, so going back to this kind of view on consumer preference around payments. So, do you feel that the digital revolution that's occurred in the last 12 months or so, do you think that continues to smash records post-COVID? Or do you feel like face-to-face at point of sale makes a resurgence at some point in the journey again?
So I definitely think face-to-face and point of sale will come back as a major source of payment volume once we come out the other side of COVID, right? There's so many things that people do in face-to-face payments that are just going to immediately come back into play, right? Restaurants, grocery stores, corner shops, you name it, right? That's going to become a play. However, if you think about this from a first principles perspective, right, where now basically everyone in the UK and the European Union has a smartphone. They are able to make payments directly from their smartphone. E-commerce is still only 10 to 20% of commerce generally in most markets and has a long way to go. I do think there is still incredible growth to happen in digital payments, because I do think what what COVID has shown people and what a year of being locked at home will teach people from a habit perspective is, oh, there's actually a lot of things that I prefer to buy online and I prefer to get delivered directly to my door as opposed to
Mhm.
going out and buying in person. And I think that growth rate is going to continue, and that will be done predominantly through digital payments. But I also think you will have a portion of payments that go back to face and point of sale. And at some point, those technologies might converge as well.
Okay. Well, on the convergence piece, do you see digital and physical point of sale converging, or again, do you see that? Do you see those two types of commerce moving further and further away? I mean, obviously, there's a lot of retailers out there who are itching for the doors to reopen, and interestingly enough, there's a lot of signs that I've seen in between the lockdowns that reverse a trend of the last 10 years where you walk in and it says cards only, no cash. Do you see that the kind of open banking payments, in-app, A2A stuff we've been discussing as being part of the face-to-face point of sale mix, or do you think those two things are going to remain completely separated?
I don't think they'll remain completely separated, but I don't think account to account payments has had the penetration at point of sale yet that it will over time. And what I mean by that is think about things like the rise of Alipay in China, where a lot of people pay face to face using QR codes. One thing that's changed and really grown here in Europe over COVID is the rise of using QR codes, right? You use it to check into locations with the NHS app now, you use it to view menus, right? And so people are getting used to this concept of, oh, I can just use my phone and the QR code to access information. You can also use that to make payments. You can use that to make payments using account to account payments. So while I think that hasn't risen up as a significant percentage of payments yet, I would not be surprised to see that happen in the coming years and to start to see account to account payments really take share at the point of sale. And I think again, going back to first principles, if you think about the fact that merchants also all have their own smartphones or iPads or smart devices, right? You have two internet connected, network connected devices. Both parties have a bank account. It just seems very obvious over time that account to account direct settlement payments on those instant settlement rails are going to start to take share at point of sale.
Sure. Okay. Well, Keith, thank you very much for your time today. We really appreciate you taking the time out to answer these questions and being part of our PCM podcast series. Thank you very much.
Absolutely. Thank you for having me, Alex.